Hey, this is Ospreyeye from mychartcoach.com, and we're going to take a look at two ticker symbols here, LABU and LABD. We're going to take a look at the S&P Biotech Bull 3 times and the S&P Biotech Bear 3 times. And so first, let's look at this LABU chart that was posted on Friday. And I just want to show you what I was thinking when I was making this chart. First of all, the Fasto here was hitting 100 when I was making the chart originally, and so it was hitting at max levels. This is signaling temporarily overbought. As you can see back here in January on the 10th, when this topped out on the 10th, you could see Fasto is at the same level. So this was one signal that it was starting to top out. As you can see, this was the peak from before, and then the other thing was this candle that was developing. At first, it was looking like a hammer was forming. There was a small real candle body. The candle body at one point was pretty much the top of it was this red line, and so it looked like with the long lower wick that it was forming this pattern right here, which is the bearish hanging man. As you can see, it occurs at the top of a trend, and it's basically a hammer forming at a top, and that is an indicator that the stock could be, or ETF in this case, could be topping out. But what happened was there was a big push into the close, and you can see there was a little pullback off of high of day, so it formed the little upper wick, and hammers don't have upper wicks. And then notice the real candle body, how big it is. It really grew into the close, so that kept it from forming a hammer. In order to be a hammer, the real candle body, which is this rectangle here, needs to be twice as long as the wick, and it needs to be a square. So basically, the pattern did not form, but it did close at resistance, and so there could be a potential for a double top here with the closing price on the 10th, and so that is going to be the key level to break. So let's take a look at the next chart. Okay, and so this chart here has more detailed information on it, and what I want to show you first is this symmetrical triangle pattern that had formed. Notice the red descending resistance line, and then look at the ascending support line. Notice how the candles had come to a flex point. They were bouncing back and forth, bouncing off support, hitting resistance and pulling back, bounced off support, hit resistance, pulled back, bounced off support, and then it hit resistance again. But then notice the close on Friday. It was above the red descending resistance line. So this is a very bullish close on Friday, and it could be signaling more upside potential. So that was a strong close above the descending resistance line, and so there's potential for this multi-month symmetrical triangle pattern that had formed to have been broken to the upside. So this could be a very bullish development for LABU. We'll have to see what happens. What needs to happen is this descending resistance line. You want to see that turn into support, and so that is lined up here with the EMA4, and so you want to see EMA4 hold, and then of course the crucial level has been this 300-day simple moving average, the blue line, and so you want to see candles stay above that level. If candles stay above the 300-day simple moving average and above this red descending resistance line, then that's going to put 45 on deck. That's going to put this resistance zone back here, and so that would be the next target. It would be this 45 zone from back here. That's going to be a key resistance level to break. If it can get above that, then you're looking at this high close back here on November 14th in the 49 range. And so this is a very bullish uptrend on the daily chart. Notice how candles are riding above the middle Bollinger Band, and it looks like also like this could be a breakout from this cup and handle pattern. Notice it looks like this cup formed and then a handle with the higher low, and so could be a stretch here, but it looks like possibly a breakout above that pattern as well. There was a bullish flip on PSAR. Notice the green dots are below the candles. Check out the big volume spike on Tuesday, on the 31st. That was a signal with this big white candle that formed that big money had entered, and that they were looking to push it higher. Another bullish development were the MACD bull crosses. Look how there was a bull cross on both both time frames, and so that was another signal that a possible new push higher was starting. And then another further bullish development was the bull cross on ADX. Notice how plus DI, the green line, crossed the red line to the upside. So there's tons of bullish developments on this chart. Okay, so the red flag though, and the the one thing that I think could hold this up from pushing higher on Monday is Fasto here at 98. So check out Fasto closed at 98, right at the same peak as the previous three peaks. So at the very same level. So look here at 98 on Fasto. Go down here. Look, that lines up right with this candle. With the last high. Okay, let's look back here. Okay, 98. Let's go down here and look at this candle. Look, that was the previous high in November. Okay, let's look back here in September. Right? You look at 98. You go down. We're looking at the peak right here on this doji. So the trend has been when LABU hits the 98 to 100 on Fasto, it forms a red candle the next day. That has been the trend, and it's been a historic trend over the past few months. And so that's why I was feeling kind of confident when I was posting the chart. As I've dug into it deeper over the weekend, I'm seeing a lot of really good things about LABU right here. The only thing that I'm seeing that needs to happen is there needs to be a break above this horizontal resistance, and then it has to prove that it can keep pushing higher in the overbought power zone. So you might see a little dip just to test this EMA4, and maybe that would spike Fasto down, and that would provide some more juice to push through this horizontal resistance. You notice how the candle is forming below the upper Bollinger Band, and notice how the upper Bollinger Band is pointing up. Those all are signals that it could head higher. So there is some upside potential on this chart, and I think if it can bust through this January 10th resistance, it could head higher. It just looks frothy at 98 on Fasto. To me, it looks temporarily overbought. It is on a 4-day run, so I could see a little pause and then the next push higher. I like this chart. It's looking like a really good swing trade chart. It looks like the biotechs are heating up, and that there could be a new push. Another thing that was a red flag on Friday was I know the large caps were doing really well into the close, but the small caps sold off big time. If you were noticed the trend last week, was the small tech biotech companies were running, and so we were posting daily plays every day with all these biotech plays that were in play and running. And then on Friday there was just a major sell-off. There were several that were like above 100%, and they pulled all the way back to close just up 30%. They gave back like 70% of the gains. And so when you see major profit taking going into a Friday, and then you see LABU overbought on Fasto, to me that was just a signal that maybe traders were taking profits, that the sector was getting a little too hot, and maybe it was going to cool down on Monday. So let's take a look at the LABD chart. All right, this is the inverse of LABU, and this is this is shorting the biotech sector, and so basically what we're seeing here, this is a chart that I posted back here on the second week of January. I saw this candle form down here that it was hitting support from back in November. This is the annotation from back here in January. Possible double bottom off of November support, a close above the green line would if it closed below the green line, that would be signaling downside risk, and if it hold, it could bounce. And notice it held this level, it bounced, and it ran back up to the middle Bollinger Band. Well, the bearish development on this chart this week is, notice how it bounced down here. It bounced off the bottom, and then it actually formed bullish doji star. If you look here, it had formed LABD, formed this pattern right here, bullish doji star. Which is a very nice reversal pattern. So, and that was off of our key support level. So it looked like it was getting ready to bounce with this candle on the first day of February, but it pulled back further. And then it was looking like, oh, possibly a bullish inverted hammer was forming. And it really looked like the real candle body was much smaller than the upper wick. And so it looked like it was setting up a nice reversal like candle, but that ended up, the real candle body got too big, and it pushed hard into the close, and so the bullish inverted hammer did not form. So the Bollinger Band's pointing down, the lower Bollinger Band, and so there could be more downside risk. What we want to see is a break above EMA4 at 1353. It needs to break that level to start the reversal. That'll be the first key resistance level. If this green horizontal support line turns into resistance, that's going to be a big red flag signaling more downside risk. So, this is hitting the lower Bollinger Band, which is usually a level for stocks to bounce off. But if you look back here, you can see in September, the candles can ride the lower Bollinger Band lower. They form candles many times between the lower Bollinger Band and EMA4 if the downtrend is strong, similar to over here. Look how it bounced off the lower Bollinger Band, but it kept continuing lower. It wasn't until it closed above EMA4 that it started heading higher. So that's what we're looking for now. If you look here, there was a bear cross on MACD. That was a red flag. A bear cross on both time frames. The bear flip up here, notice the green dots flipped above the candles. That was another red flag. There was a bear cross on ADX. The green line crossed the red line to the downside. And so this chart is looking really bad, right? It just looks so nasty right now. And we're thinking, when is this going to bounce? When is this going to bounce? Well, look at Fasto again. Fasto for LABD historically bounces off this level. Look at this green line here. So check out this square. Here's the bottom. And then check it out. It correlates with the bottom down here. That's the exact same level that it bounced off of on the previous drop. Okay, let's look over here. Here's Fasto at the bottom. Down here, look, this is the same level that bounced off back in November. Okay, and then if you go back here in all the way back into September, you can see when it finally hit down to this level at 1.4. Look, that's the bottom down here. So it's set up for a technical bounce. Yes, the chart looks like, excuse my language, it looks like crap. It looks bad. This chart does not look good. It's looking like a downtrend. It's not looking good for the biotech bears, but it looks like it's due for a technical bounce play. And that's all I'm talking about with the chart on Friday. It looks like, this is getting oversold at 1.4 on Fasto. It's extreme oversold levels. And so this is due for a technical bounce. So, the LABU could push higher on Monday. I think if it does, it's going to really be overextended, and it could be setting up for a potential pause. So this is more like a technical bounce play for LABD, and then a pause in the upward action for LABU. I think that the LABU uptrend should continue, and the way this chart is looking, there's a good chance that the LABD downtrend will continue. We're just looking at technical bounce play here. If you look at LABU on the on this chart here with the RSI, you notice that RSI here has a history of pulling back. Like this last run, there was a peak here just above 60 where it's at right now, and that signaled the previous top. So if it can get above 60, notice what it does when it hits 70. 70 was the top back here, and then 70 once again was the top over here. So you're looking at a potential RSI is signaling that this was the same level it topped out last time. That's another reason why I was thinking that it's starting to hit those overbought levels. And if it can push through this 60 resistance, it could run to 70. But history says that LABU does not like to head higher above 70 on RSI. So it's getting into that frothy zone. It's the technicals are signaling it's just getting ahead of itself. It's on a 4-day run. I mean, look here at the previous run in January. It spiked up like this spike, and then the following day it was up, but only up slightly, and then it formed a topping type candle and then pulled back. So we're thinking here, this could push higher or it could top out. To me, it's looking like it's a little frothy and it needs to cool down for a second before the next big push higher. Running all the way up to 45 now with Fasto at 98 and RSI pushing this level seems like a stretch. It could happen. We'll see how strong the bulls are. But if it does pull back, just look for a reload off of the 300-day simple moving average or the EMA4 if those levels hold, because it looks like this uptrend is strong. As long as this horizontal resistance line turns into support, there should be a launch off of it to higher levels. The eventual target, once it gets above this 43, is going to be back up here at this 49 to 50 zone. So yeah, so this is looking bullish for LABU. It looks like it's getting a little bit frothy. healthy. Keep an eye on it next week. You know, this should be in play. We'll know on Monday, you know, if that was profit taking heading into the close there, or if they were loading up for the next push higher. Okay, thanks for viewing this chart. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.